want to you post on
Okay,
you,
I'm recording it. I'm recording. I prefer you record it, but that's all right. I'll record it for you.
but I
Okay.
don't want you post
All
in
right. Yeah, all
YouTube
right.
because
No,
I don't want to my coworker see it.
not a problem. Not a problem. It's
Thank
now
you.
being recorded.
Later you can send it to me. I watch again. Yeah.
Okay. Okay.
Mhm.
So, all
Yeah.
right. So let's see if I still have my other ones I did for that previous one. So there we
I need
go.
to find you early.
Hold on. Let me just see if I can redo this.
If
Boom.
I find you early, I will already
There
started
we
the
go.
study
So there we
with
go.
you.
There's our previous one we did for your recording, right?
Mm-hmm.
That was the answer set we said was very testable.
Yes.
Now we're on this next one we're going over, which is the reinvestment risk. And there's a couple of test questions about zero coupon bonds. Again, I'm not concerned with Notman's questions as much as I'm concerned with the proper answer on your actual exam. So what is testable about zero coupon bonds is they can be used to lock in a rate of return because you don't have to every 6 months for 30 years. You're not making that decision. Your rate of return is locked in. That's one test question about zero coupon bonds. What is another potential test question about zero coupon bonds? They're good for somebody who needs a set sum of money at some future date. Now, for example, impress your friends. I went to a baby shower, a baby shower, and I said, I have the baby $20,000 when they start college. I did not say I have the baby $20,000 today. I said I have $20,000 when the baby starts college. What I bought was an 18-year zero coupon bond. Now, her mom doesn't understand zero coupon bonds because she calls me every year and goes, Dean, those things are so cool. They go up every year. I go, well, yeah, going up every year. And baby Grace, baby Grace is now, I think, like 12. She doesn't have to worry about reinvesting that money. Her rate of return is locked in, and she's going to have 20 grand when that matures. Right. So zero coupon bonds are good for somebody who needs to set some money. So if you need X number of dollars 30 years from today, this might be a good investment opportunity. One other test question. I'd like to tell the IRS that this is a long-term capital gain because I've held this zero for more than 12 months. But the IRS says, no, 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 no. They say, Dean, there's an imputed interest you're receiving on those zero coupon bonds. And so you have to do straight line amortization upward. I'm not going to make you do this on your exam, but you do need to know that that straight line amortization upward, that accretion is testable. So this isn't going to be good for somebody in a high tax bracket because they're going to be paying taxes on money they're not actually receiving. So zero coupon bonds have what we call phantom income. What I mean by that is you're paying taxes on money you're not receiving, so that kind of sucks. All right. Any other questions on zero coupon bonds?
So that means for zero coupon, we can save for kids for tuition,
Yeah,
right?
college education is a perfect example of where we would use a zero
Mm-hmm.
coupon, right? Zero coupon means no coupon, no income. Right?
Yes, and
We refer to
also
that as
the customer buy zero coupon at discount price.
that's always,
Mm.
always. All right, this next one is testable. So again, I like the questions you want to go over. And once again, it's not so much Notman's version. Hi, Notman. I love my Notman guys. Anyways, the answer sets are spot on. And so there are very few things you can do in the securities industry that expose you to unlimited risk. And agreeing to sell stock you don't own is definitely one of them. So I like this answer set. Once again, I like the answer set. And I like the answer set more than I like the question, but the riskiest option position would be one that exposes you to unlimited risk.
Mm-hmm. Yes.
And, I'm going to just change this answer set a little bit. because for our purposes, test purposes, we should know there's two types of options, calls and puts. You can
Yeah.
either buy them or sell them. And so that means we have four basic option positions. So this answer set is very, very testable. And, so I think a lot of times people think there's a zillion things going on with options. There's not. And then it's kind of like learning a foreign language, right? They say when you dream the foreign language, that's when you know it. So I guess when you have your first, series SIE dream, you're on track. Covered calls and uncovered calls. Covered calls are agreeing to sell stock you own. You're agreeing to sell stock you own. And that means you don't have unlimited risk because the worst case, it gets called away from you. And we do covered calls. Covered calls is a very, very conservative option strategy. We use it to generate additional income. And that does not have unlimited risk. Writing puts is the same as shorting a put. And when you write a put, you're obligated to buy the stock. I think the contract specifications are pretty important. So in, worst case here is I write a put, I'm going to be buying stock that is worthless, but that's definable, right? Let's just go back up here a minute ago. And we wrote 20 March 50 puts. So, short, right are the same things. So worst case, I'm going to pay $50 for worthless stock. That may be a lot of money, but it is definable. It is definable, right? Buying a put is a choice to sell. And again, when you buy an option, you should know the worst case is you just lose your premium. You lose your premium whenever you establish a choice. This is a choice to put the stock, to sell the stock. You can have a choice to sell the stock or a choice to buy the stock. Doesn't matter. Choices cost money. Here, when you do uncovered call writing, that's also known as naked calls. I joke naked. If you're naked outside the privacy of your own home, bad things are likely to happen. We might say, why don't you cover yourself? So this is also known as a naked call. And if you get exercised, I'm your broker and I call you and I say, hey, Shally, you know those calls you shorted or wrote? Those naked calls? You've got exercised. You say, well, I choose not to be exercised. I say, well, you're confused, my friend. You don't have a choice. You have a what? An obligation to sell stock you don't own. So you're going to have to go into the open market and buy that stock. You say, well, Dean, what's it going to cost me? I say, I don't know. I don't know. You do not own. Boy, that's really dangerous. Agreeing to sell stock you don't own. There's nothing that expose you. There's two things you should know that expose you to unlimited risk. And the two things that expose you to unlimited risk are naked uncovered calls and shorting the stock. So if I come in your office and say, I want to lose so much money that you in advance can't tell me how much. I said, well, if you agree to sell stock you don't own, my friend, that will certainly do it. That will certainly do it. Right? Unlimited risk. So here again, it's about the answer set. And that is when it has it. So uncovered call writing, let's see what Notman tells us. Uncovered call writing is the riskiest option position, indeed. The potential loss is unlimited. That is very much a test question. The writer is obligated to sell the stock of the strike and repurchase the stock. So what you're going to have to do is you're going to have to go buy the stock in the open market to deliver it to strike. And there's no longer a limit how high I could go. So if I come and say, I want to lose so much money, you can't tell me advance. You say, Dean, if you short a call or you short the stock, that's like picking up nickels in front of bulldozers. I go, Shally, listen, I know it looks like a free nickel, but there's a bulldozer coming. I would just leave the nickel alone. If you're going to sell the call, buy the stock. Do the covered version. Do the covered version. All right. Any questions on this one before we move on to the next one?
So for uncovered call, that means they don't own
That's what
assets.
that means. That's what that term means. And again, it's like learning a foreign language. Absolutely, Shally. That's exactly what that word means. I told you one of my favorite students over the last couple of years, Can you imagine? And maybe you're in this similar situation. She would get so frustrated. Her primary language is Mandarin, and she would be calling me, and I'd be laughing, and she'd go, "Why are you laughing?" I go, "I'm not laughing at you. I'm laughing with you." She says, "Dean, I'm putting these words into my Google Translator, and nothing in Mandarin equivalent is coming back." I go, "Well," I said, "Well, that doesn't surprise me because it isn't in English to begin with."
Yeah. I,
All right.
I graduated from Thunderbird University.
Yeah,
Yeah.
yeah. So, all
Yeah.
right. So now let's look at our next one.
Yeah. Okay. Continue.
Let's see. Which of the following best describes information barriers? So this is about material non-public information, and all broker dealers need to have written supervisory procedures. Very testable. These are called WSPs, and we make every new hire read the WSPs. So that way, if you say, "Oh, I didn't know that, that wasn't on my exam," I said, "Well, it Shally certainly was in the WSPs, and here's your signature saying you read it and you understood it." And so this is to keep the people in banking who have material non-public information from that bleeding into the trading desk or into the research area. And so this is to prevent the misuse of non-public information. We used to, Shally, call it the Chinese wall, but we don't call that anymore because, for a couple of reasons. The Chinese wall historically never worked. People went over it all the time. And now we call, instead of the Chinese wall, a research information barrier. So you said to prevent inaccurate disclosures in research reports. I guess that's your answer. No, it is actually to make sure that we are protecting material non-public information from people at the firm. Because there's some people that need that to do their job, banking, for example. And there are some people who have no need for that information. And
Mhm.
we're afraid they would do it. I thought this was interesting. Boy, talk about knowing the rules. She found that her fiance, she works in investment banking, and she
Mhm.
found that her fiance was accessing her laptop and trading, finding material non-public information because she has it because she's a banker, and he was
Mhm.
trading on it. And boy, I was impressed because when I understand she didn't get entangled, she immediately closed her laptop, left that apartment, never came back, called her compliance and legal department, and that guy went to jail. I thought,
Mm.
I thought, man, smart lady. She didn't just sit down with him and talk about anything. She said, "You idiot, how could you do that?" Right. And now, by the way, that means their research information barrier wasn't strong enough. And now they
Mm.
plug that gap. Now, I think she could have still got in trouble because if I was a compliance, I'd say, "Well, what the heck are you doing leaving your laptop in a position where that guy can access it?" I mean, there should have been some kind of a password protection or something like that. But I only know what I read, so maybe she did. I don't know, but right, that's what that's all about.
And Dean, isolated the information as a member for non-public information. Also, there is a regulation S and P.
Well,
Also,
yeah,
is a
that's to protect. Well, that's different. So that's protecting your tax ID number, your stuff, your information. Because I have all your information, right? That's to
yes.
protect you from like identity theft. That is where I need your permission to cross solicit you. I was reading where Merrill Lynch says they have, I forget how many millions of Bank of America customers that they can cross solicit for the broker dealer. And they're doing it the right way, but they need permission of a Bank of America customer and a regular SB to say, "Hey, would you like our Merrill broker to reach out and to contact you?" And you can say yes or no to that
Mm.
information, right? And then I also need to make sure that I don't have somebody who can, break into our data and get your information.
Mm. That is a
All right.
consumer information. Mhm.
Yeah, that's exactly right. That's exactly right. Right. So, it's, by the way, it applies to everybody. So, it's like, the one I always think of is, I have ongoing relationships with people and they have my credit card on file. And when I buy something from that chalet, whether it's wine or cigars or whatever, I just hit the button and I know they have my credit card information, but they
Mm.
have the obligation to protect that. And then
Yes.
there's other people I go, "Well, what the hell? You still have my credit card information. This is a one-off transaction with you. There'd be no reason for you to be saving this information." Right. So the SP is also about, do we have an ongoing relationship with somebody, or are they just buying I just bought some, shelves, I don't expect them to
Mhm.
keep my credit card information. You
Mhm.
do get economic questions. You do get economic questions. And again, I love the QID numbers here. I like the answer sets. I think this is definitely spot on. This is a definitional test question. It's the total goods and services an economy produces. This is very much an aim and shoot, point and click question on the test. USA, number one. Nobody produces more products and services than the US economy. China's number two. China's number three.
Yeah.
Germany is number four. California, if it were its own country, it's not. It'd be number five.
California also, there is a big growth.
Yeah, right. So very much a test question. The other one I would know here in economics, you should definitely know monetary policy is controlled by the Federal Reserve Board, and that's about inflation, right? And the tools of the Fed, buying and selling government securities, right? Because the Fed wants to make sure there's not too much money chasing too few goods, inflation, right? They don't want to make sure there's not too many goods, not enough money. Price stability is what they're after. You need to know about fiscal policy, government spending and taxation controlled by Congress and the president. You need to know that 2 calendar quarters of declining GDP is a recession. I just was talking about Germany. Germany just recently had 2 calendar quarters of declining GDP. Uh-oh. Germany is officially in a recession. I feel sorry for my German friends, right? They were selling all kinds of things to their Chinese friends, and as part of that, we're transferring technology to China. And now a lot of Chinese consumers are saying, yeah, you know what? Not sure I need a German car. Well, I can buy a, Chinese car, that's tough. That's tough, right? It's tough for our German friends. 6 calendar quarters of declining GDP would be a recession, or excuse me, a depression, right? So you get some basic economics. I always joke, nobody expects you to be an economist, but they do expect you're not going to embarrass the firm at a cocktail party, that you kind of know enough to kind of sound good. And I always joke, Shally, if anybody ever asks you about economics, finance, or investments, and you want to sound smart, you should say it has a lot to do with interest rates. And if you just shut up, you sound good. And they say, what about them? You say they fluctuate. They say, could you tell me more? Is that good news or bad news? You say it depends. You say, right now I'm watching the Fed. I know they said they're going to be lowering rates. I want to see how much, right? So all that stuff is in there for sure. All right, that was an aim and shoot, point and click question. I love these answer sets. I mean, these answer sets are pretty spot on. An investor who desires the ability to trade in and out of positions throughout the day would be least likely to place orders. Well, I like that. I don't like, again, my Notman friends, I don't particularly care for the question, but I love the answer sets. And what this answer set is about is that one of these things does not trade supply and demand. You can't get in and out every day of an open-end mutual fund, because an open-end mutual fund, you only get in or out based on the next calculation of the NAV. That part is very testable, forward pricing. All these other things trade like a stock. They're just, you call your broker, say, I want to buy 1,000 shares of the Mexico Fund, MXF. The Mexico Fund is a closed-end investment company. It's a mutual fund in Mexico that trades supply and demand. ETFs trade supply and demand in the New York Stock Exchange or American or wherever. Open-end funds and primary transactions, primary, not secondary. A trades in the secondary market, B trades in the secondary market, D trades in the secondary market. This transaction here is a primary transaction. You're doing business directly with the mutual fund. And so that means it doesn't trade, and you can't, the question is trading throughout the day, and that's not the case. As we said, this is going to be secondary trading, supply and demand. We said this is secondary.
Yeah.
And we said this is secondary.
ETF. Yeah.
I like the answers that. Again, I do like that answer. So.
Okay. That is a primary market. So that's
right.
why they cannot trade. Yeah.
Yep. And then you said here, this is what we just said, 2 calendar quarters. That's very much a test question. I just told you that was a test question, right? You said depression. Depression is 6 calendar quarters. Now be careful. Dean said 2 calendar quarters. Well, a quarter is 3 months. So 2 of them would be 6. right? So it's just different phraseology, but to say 2 calendar quarters is the same as 6 months, right? And then a depression, I told you, is 6 calendar quarters. That'd be 18 months, right? Even when we were having troubles financially, economically, every economist I heard interviewed said, well, we'll see if the Fed is able to bring us in for a soft landing without a recession. Soft landing means no recession. And so far, they've been doing pretty good. I don't know. The landing's not quite over yet, but they're talking about a soft landing. So without the recession, that's what they're saying. So that would be. I saw no economics person talking head saying, "Well, I'm afraid of a depression." Oh my God, that would be scary. That means somebody thinks we're going to be in 6 calendar quarters of declining GDP. That would be terrible.
Yeah, that is a depression. Yes,
That's a
6 quarters.
depression.
Mm-hmm.
They don't get into the dollar amounts here. I wouldn't worry about this at all because, again, they don't like to have to update the test for changes. And so they don't typically get into like dollar amounts. What they get into is, 59 and a half, 10%, RMDs at 73, 60-day rollovers. So that's what they typically get into. They don't typically get into a actual dollar amount, but it is $7,000. So wouldn't worry about it. I would know Roths have no RMDs, no required minimum distribution for a Roth. I would know that you can get tax-free distributions from a Roth, and you're funding it with money you've already paid taxes on. So I would be able to contrast a traditional IRA with a Roth IRA. You buy a REIT for the same reason you buy a mutual fund. You buy a REIT, professional management, diversification, ease of ownership. The difference is in a mutual fund, it's a diversified portfolio of securities that are being professionally managed. And in real estate, it's going to be real estate. But both mutual funds and REITs have to pass through 90% of their net investment income. So two of them. So we definitely need 4. They offer depletion allowances. No, depletion would be for oil and gas. I wouldn't worry about that at all. They offer the opportunity for capital gains. Absolutely. Right? I mean, you buy the property low, you sell the property high. Absolutely. Pass through. No, partnerships have a flow through of losses. All mutual funds and REITs pass through is income. They don't pass through losses. The only thing that passes through losses are direct participation programs, also known as partnerships. So pass through the losses would be a partnership. Let me just put that there. Partnerships do that. Also known as DBBs.
That's your DPP. Yeah.
Yeah, that's the
DPP. Also, I already booked the class with you for DPP. I already booked.
We'll be doing that Wednesday. Absolutely. So by the way, I'll comment there. I'll comment there too. But it's. I think all test prep vendors go overboard on partnerships because you're only going to get a couple of questions. So, all right, investor buys 100 million or buys $1 million of 10% corporate bonds at par. Wow. Okay, so 10% of $1 million means you're getting $100,000 a year in annual interest. 2 payments of $50,000, assuming they don't default. At the end of the day, the bonds close up a 0.5 point. Well, you should definitely know that a bond point is $10. You should definitely know that a bond point is $10. It's 1% of par. So let's put that there.
I remember last time there is a question when I took the exam. Is mentioned. Yes, is mentioned the point. Yes, I remember the answer is 0.001 0.1.
Yeah. I wouldn't do it that way. I would just use the dollar amount, right? So I know that a 0.5 point is $5. So here's what I would have done. I mean, there's lots of ways to do math, so you can't get too hung up on how people choose to do math. I personally would have taken the $1 million divided by 1,000 to find out how many bonds that is. That's 1,000 bonds.
Yes.
And then I would have taken the 1,000 bonds. I would have times it by the $5. And so that means I'm up $5,000. Right? You see how I did it? So there's a lot of ways to do the math. I think the 0.005 is kind of a mess personally. I wouldn't have done that. I would have just taken, I know a bond point is $10. I know a 0.5 point is $5. How do I do that? I can get 1 divide by 2, and then I can times it by 10, and that gives me the half a point, gives me $5. So lots of
Yeah.
ways to do math. I
Mm-hmm.
personally would not have done it the way that Notman's showing us here. I would have taken the million divided by 1,000 to find out how many bonds I have, and then I would times that by 5. Lots of ways to do math. I don't think I would know bond point is $10, and I would definitely know that a point in a stock is $1. So if I told you you're up a point on a stock, that's $1. So a bond point is $10. A stock point is $1.
Mm-hmm.
Who sets the margin for an OTC stock? The SEC has nothing to do with margin. It's the Federal Reserve Board. The Federal Reserve
Mm-hmm.
Board is the one who says you got to come up with 50%. That's called Reg T, and that's a part of 34. And it says that the Federal Reserve Board is in charge of credit extension of broker dealers to customers. Right. So that's just by definition. By
Mm-hmm.
definition, it's the Federal Reserve Board. Right. The SEC, the right answer to the FINRA would be the SRO for the securities industry. That stands for self-regulatory organization. And the SEC is God. I'm joking, but the SEC has primary jurisdiction, interpretation, and enforcement of the domestic securities laws of the United States of America. That's the SEC. The New York test question is an auction order-driven market. You have to be able to contrast the New York Stock Exchange with over-the-counter markets. The New York test question can best be described as an auction or order-driven market.
Mm-hmm. Auction or order driven.
Secondary market, right? So those, again, all the answer sets here are pretty good. I like the answer sets. Where Naughton, I think, is doing a good job on the answer sets is they're giving you distractors, wrong answers that are right answers to different things, right? So, I like that. So, these other could have been answers to different things. Well, the two major pieces of securities legislation are 33 and 34. 33 is about paper prospectuses. 34 is about people and places. 33 is about paper and prospectuses. 34 is about people and places. So 1, enact a series of trade to make it appear as actively traded. Yes, that's a very unethical thing. That's called giving the false impression of volume. Big no-no. Induce making misleading statements. Absolutely a violation. Making trades upon non-public information. Yeah, 1, 2, and 3. I'm not sure what the challenge on this one was, Shally, but definitely 1, 2, and 3.
Mm.
You remember what you were struggling with on this one?
No.
Which
Yeah.
of the
So.
money market instruments? This is very testable.
Mm-hmm.
Finances, imports, and exports. It's bankers' acceptances. So, I always think, what would I do if I needed to, come out of retirement and, come up with a job? I think importing Nicaraguan cigars would be great fun. Now, if I go down to Nicaragua, nobody there is going to take a check from me, personal or corporate. And a briefcase full of cash would not be a good idea either. So I say to the cigar guy, I say, hey, listen, this is a banker's acceptance from JP Morgan. You may worry about Dean, but you shouldn't be worried about JP Morgan making good. JP Morgan will accept this on this date for X number of US dollars. And US dollars are probably better than your Nicaraguan currency. I realize you probably want the money now. So what I would suggest is go to Managua and find a bank that has a correspondent relationship with JP Morgan, and will cash you out of that, a money market fund, and hold it to the acceptance date. So none of that is testable. It is just aim and shoot, point, click. This question, bankers' acceptances are used to facilitate foreign trade. That's very testable, right? CDs aren't used to facilitate foreign trade. ADRs are not used to facilitate foreign trade. And commercial paper is not used to facilitate foreign trade. ADRs are very testable. ADRs facilitate U.S. trading of foreign securities, U.S. citizens owning foreign securities. But that's not what this is about. This is about, international trade.
Okay, so for U.S. citizen own foreign security, that is ADR.
Yeah. If they said, which of the following best characterizes a foreign security traded in U.S. markets, that would have been ADRs.
Yeah.
Right? So.
Yeah. For bank acceptance, I think that is like a letter of credit. Yeah.
Well, commercial paper is large unsecured borrowing by corporations, right?
Yeah.
That's what commercial paper. They said, which of the following is unsecured borrowing by corporations? By the way, ADRs aren't a money market security. I could have said all the following are money market securities except, and then the answer would be C. ADRs are not money market securities.
Yes.
CDs are, bankers' acceptances are, commercial paper. These are found in money market mutual funds. They're issued at a discount and they're used to facilitate, do whatever. CDs are not issued at a discount, but bankers' acceptances, commercial paper are, and CDs and bankers' acceptance have a max maturity of 270 days. CE now, it's annually. It's annually, right? So it says here the firm element. B would not be the firm element. B is the old version. We don't have the B anymore. B has gone poof, but it used to be B, and now it is A. It is A. ETN's very testable. So what this question is getting at, again, I like what the question's getting at. ETFs are an equity investment. ETFs are an equity investment. And so A is not correct. ETNs are different than ETFs. The F stands for fund, the N stands for note. So the ETF is not a debt instrument. You do not have default risk in an ETF. There's a custodian and they're actually holding those monies in securities. So ETFs do not default because they're not a debt instrument. There's no credit risk. An ETN is a debt instrument. There's not a custodian. They're not holding the monies or securities. They're simply agreeing to pay you whatever the referenced index does. B, so it would be not appropriate to say these products carry risks not found in an exchange traded fund. These are not, there are no underlying assets backing these products. That is appropriate. There isn't. Since these products are exchange traded, they're suitable for anyone who would buy stocks. Investors concerned with issuer credit risk might consider it as an alternative. Yes, there we go. I don't really like the question, but I do like what we're testing on is that ETNs are an instrument and B and D are the test points, right? There are no underlying assets and you have credit risk, right? So the language's grammar here is atrocious. Since these products are exchange traded, they're suitable for anyone who would buy stocks. This is the first time I take exception to my friends with Nauman. I'm not sure I would agree with that. ETNs are unsecured debt instruments. That we agree, and that's testable. That is the testable point. So the testable point here is found in the rationale. The testable point is found in the
Which
rationale.
one is testable?
That's right here.
Oh, okay.
Right.
Unsecured debt. Yes.
That's testable, right? Unlike ETFs, ETNs are not backed by a separate, they're not equity investments. And here we go. Test question. They have credit risk.
Yes, because they issued by bank.
That's
If
exactly
the
right.
bank grade is going down, there
That's
is
right.
credit risk.
That's right. Can you say Credit Suisse? Right? They're no longer with us, right? So,
yeah.
all right. Good. So that's very testable. I don't like that question. That's my least favorite Nauman question so far. Not because, again, I think the testable content's there. I just don't like all the gobbledygook in it. There's a lot of gobbledygook. George's FINRA registration has been deemed inactive. George may accept unsolicited client orders. No. Meet with a client. No. Yeah, he's not registered. So C.
Yes, it's not registered.
Yeah, you don't register, you can't do anything. When a stock index call option is exercised, this is very testable. Index options settle in cash. That is very, very testable. So if I had to actually deliver all the stocks in the index to you, nobody would play. If I had to come up with 100 shares of 500 stocks, no. I say, Shally, I just owe you whatever the intrinsic value is in cash. Right? That's not true in equity options, right? Equity options, you have to deliver the underlying. So here it's cash. This is an aim and shoot point and click question. We've had a couple. This is an aim and shoot point and click. This is just on the test as it reads here. Yeah, Nauman has the spot on, and you need to know it settles in cash, right? So B is the answer.
1 minute, Dean. I have a question in here. So for
Mhm.
index call option, here is a talk about cash equal. How do I know this is here? How do you know this is a
Well,
cash?
it's aim and shoot. It's aim and shoot. So if let's just do it. Let's say it's an OEX and the strike is 550 and the OEX, you own the 550, the OEX, looks like I messed up. The OEX is the Standard Poor's 100. And I tell you it's 550 and you own it. And now it closes at 568.
Mm-hmm.
So I owe you $1,800. The intrinsic value of a 550 call with the market of 568 is 18 points of intrinsic value.
Oh, so in here, cash, that means intrinsic value.
Yeah, that's what that means. It's what it says, right? So, by the way, I don't think they're going to make you do a calculation. It's going to be simply the way that Nauman has it here. The way Nauman has it is, oof, and they've got the question spot on and they got the answer spot on, right? So they're spot on that one. The classical balance sheet equation. The classical balance sheet equation is, I struggle with this because I always think of it as assets minus liabilities equals net worth. Assets minus liabilities equals net worth.
Yes, liability plus equity.
And so I have to adjust myself and say, okay, well, that's the same as saying the liabilities equals the assets equals liabilities plus shareholder equity, right?
Yes.
So that's why it's called a balance sheet. So see, I would know the classical balance sheet equation. Classical means we think everybody knows it, right? So I would have struggled a little bit with this, but the other way people express this is assets minus liabilities equals net worth, right? Investors in variable annuities will sometimes be subject to surrender charges and administrative fees. These charges and fees will, yeah, it comes out of your return, right?
Yes.
Comes out of your return. Shouldn't be struggling with that one. Which of my statements concerning mutual funds is not correct? Oh, this is a bad mess. You should definitely know that letter of intents are 13 months, not a year, 13 months, and can be backdated, right? So B is incorrect because the test question is to know 13 months. That is very testable. Letter of intents are how you get a quantity discount. I say, Shadley, if you'll agree to invest X number of dollars over the next 13 months, you can qualify for that breakpoint and get the reduced sales charge today. And that can be backdated 90 days. It can be backdated 90 days. So by definition, you should know B is not correct.
1 minute. I want to see the answer C. So their net asset value must be determined at least
You should
once
definitely know under the
introduced.
Investment Company Act of 1940, all mutual funds must calculate their NAV at least once per business day. C is correct.
Oh, and also both they have load
D.
and the low load funds have
Yeah, you still have
expensive
expenses, right?
ratio.
Manager, the biggest expense is the management fee.
Mm.
A is true, right? There is a problem with having monkeys harvest bananas. They eat the product, right? They eat the product. D is true. Within 7 calendar days, I have to give the honorary redemption request, right? So it's B. Peter has been asked to analyze the latest data on corporate profits and the average duration of unemployment. I wouldn't worry about this one. This one is lagging indicators because it's things that have happened 3 months ago or people who are unemployed. The one I would worry about on your test is leading indicators, not lagging. So on your test, the actual test, I would know leading indicators. The one I would know is stock prices. The stock market is all about profits or future expectations of profits. So I disagree a little bit here with Nauman on testing you on the lagging because what's going to show up on the test is leading, right? We talked about the business cycle already. That's testable. We talked about a recession and a depression. That was testable as well. right? So yeah, I wouldn't worry about that one.
Mm.
Albert owns 2,000 shares of DDD Inc., a thinly traded stock. So thinly traded means there's not a lot of volume, not a lot of people buy or sell, right? I would think of it like a car, for example. I'm out here on my off-grid location, Shally, and I have a sports car that is very thinly traded. And that means I'm not going to get a lot of money for it. It's going to be a big spread between what Dean paid for it and what I'm going to get now. You know, my other car that's sitting out front is a Hyundai Santa Fe. Very liquid. There's
Mm.
lots of them running around, right? So
So,
here it says the market for the security is significant, characterized nominal price change. No, there's big gaps in trading when there's thinly traded. Thinly traded means it's got a big spread. Yeah, there we go. B, small spreads. No, small spreads would mean it's not thinly traded.
this
Large,
like a penny stock, right?
what's that?
Penny stock, penny stock. 1 minute, I type in here.
Oh, you
Penny,
what? I'm sorry.
penny, Penny, penny stock.
Well, no, it's not necessarily. I like what you asked here. That would be a separate question, but thinly, you're right. Not
Mm.
all thinly traded stocks are penny stocks, but all penny
Oh,
stocks are thinly traded, right? So not all thinly traded stocks are penny stocks. A penny stock, very testable, and they
yeah,
didn't tell us about this, is a non-NASDAQ stock under $5.
yes.
So there's nowhere in this question that it says this is a non-NASDAQ stock under $5. Let's be very clear about that because I'll say it again. Thinly traded stocks are not necessarily penny stocks.
Oh, okay. I think this
Right?
is penny stock.
You
Okay.
know, a Kohler is no longer publicly traded, but when Kohler was publicly traded, they make bathroom fixtures. And Kohler traded at the time in the pink. And the bid was $5,000 and the ask was $10,000. That is
Mm-hmm.
not a penny stock.
Mm-hmm.
Right now, penny stock, very testable, know that definition. Non-NASDAQ OTC stock under five.
Mm-hmm.
The other thing to know is that if you have a penny stock in your account, you get an account statement. How often?
Mm.
Monthly.
A
So
monthly get a
that's right.
statement. Mm-hmm.
Usually it's quarterly, test question, but if it's
Mm.
a penny stock, it's monthly, very testable.
Okay.
Very testable. Know that in penny stocks,
Mm-hmm.
we have to give you a disclosure document
Mm-hmm.
where you say you understand
Monthly.
that you're buying a speculative low price security. A speculative low price security. That
Uh-huh.
does not apply to an established customer. And what is an established customer? That's somebody who's done 3 penny stock trades with us or has had funds with us for a year.
For
In
1 year.
that case,
Yes.
I don't have to give you that. We assume you know what you're doing.
Yes, that is established customer. Yes.
Yeah, right.
Mm-hmm. Mm-hmm.
Okay, so that's very testable. So, but then this question, let's be clear, there's nothing in this question that says it's a penny stock, right? Nowhere does it say that's a penny stock. It's just thinly traded, right? All
Mm-hmm.
right, this is outrageous. My friends at Knopman, oh my goodness, this is outrageous that they're asking you to calculate the accrued interest. You are not going to have to do this on your test. What you do need to know is the accrued interest is paid by the buyer to the seller, right? You don't have to calculate this $12.44. Now, in your Series 7, if you're going for a Series 7, you might have to do this, but not on the SIE. But that $12.44 is paid by Miss Jones to the seller saying, hey, I'm going to get a check on July 1st, and I understand that represents the entire time frame. And, you know, I didn't own it for the entire time frame. So here's $12.44. You need to know it's based on 30-day months, and you need to know the regular way settlement is T plus 1.
Mm-hmm.
T plus 1, right? So this is all recognition questions, not practical application. So this is outrageous that they're asking you to do practical application. The only thing you're going to have to do practical application on your SIE is current yield. You're going to have to calculate current yield. You're going to have to know break even, maybe a break even on an option.
Mm-hmm.
Right? So there's not a lot of practical application. I wish there were more. I wish there were more. Very testable to know where we place orders in relationship to the current market price. And we have a great memory aid device for this. And the memory aid device for where we place orders in relationship to the current market price is slobs over bliss. Slobs over bliss is a great mnemonic for where we place orders in relationship to the current market price. So this says a sell stop. So slobs, that's going to be sell limit, and buy stops are placed above the market. That's where the slobs is. Bliss is buy limits and sell stops placed below. And this is it is a test question. And let's just put this here. So this is going to be sell limits. This is going to be buy stops. And this is going to be buy limits. And sell stops. And boy, I'll tell you, these things are great, right? Because this mnemonic helps us get these questions right. So a sell stop is entered below the current market price. Boom. I like this. Here, I told you I like the answer sets, but here I like the question because I can change that question a gazillion ways. I could say a buy stop is entered, and now the order is above. Right? I could say a buy limit is entered, and again, it would be B. So I'd be prepared for all different versions of that kind of a question.
Yes.
All the following are prohibited during the cooling off period. Very testable. The cooling off period at quiet time is 20 days. And so what I can do during the cooling off period is send you a preliminary prospectus known as a red herring. A preliminary prospectus known as a red herring that has pretty much everything you need to know except the final offering price. Based on that, I can accept indications of interest, which are non-binding on all parties. I'm not allowed to advertise, but I can place a tombstone. So I can actually solicit you, not for the order, but for an indications of interest. That is very much a test question. Very much a test question about a cooling off period or quiet time. I can't advertise, but I can place a tombstone.
So you mean in cooling off period, and also they can accept indication of
That's right. That's right.
from the customers.
That's right. I can't do A, I can't do C, I can't do D. Very. Tranches is the French word for slice. You should definitely know that tranches mean CMOs. If you get a CMO question, it's going to be just the different cash flows. So we have two versions of this. We have PAX and we have tax.
This I don't know.
That's okay. I mean, you're not going to, well, you don't know. You know, I'm sure there's lots of things you don't know.
I don't know.
But it's part of finding what you don't know, right?
And what does it mean for PAS?
Means plan amortization classes. And plan amortization classes have
plan amortization. Oh, okay. Plan.
And that means lower risk, and targeted amortization classes, less predictability.
Okay.
What we're doing is carving up a mortgage pool. I wouldn't worry about it, but we're carving up a mortgage pool into various cascading cash flows called tranches. Right. So, you know, we have two versions of these, PAX and tax.
So why for TACS is less predictable?
Because it's the later cash flows, and it's harder to predict further out.
Later cash flow.
Right? These are the earlier cash flows.
Oh, okay.
And these are the later cash flows.
Oh.
And again, it's risk and reward, right? You know, it just depends on what you want to do. How much risk do you want? Right. All right. Well, our hour is up. Our hour is up. I can't tell how many of these you got right or wrong. It doesn't look like it just looks like you get all the right answers, except for a couple of them. Is this the Notman exam they have for free, or is this one you're using Notman?
Yes, because our bank, so we cooperate with the Nana with that
Uh-huh.
website. So
Okay.
they have an instructor to training us, but they only talk about very general, you know.
Okay.
That's why
Okay.
last time I didn't pass. So
Okay. When's your test date? You said Wednesday or Thursday?
Wednesday, next Wednesday, October 3rd.
Oh, okay. Are you still coming to that class? Are you doing the
Yes.
7 next?
So first time I did to pass security license, then I did to pass Series 6, then
Okay.
I did to pass Series 6-3
Yeah.
because my position
Okay. Okay. Got it. I
is
got it.
is a private is a
I got
licensed
it. Private bank.
private
Okay, I got it.
accountant. You
Okay. I
like
got
it?
it. I got it. I like that. So, um, Tuesday night, Tuesday night, if you go to the booking page, we have a free lifetime. Are you already in that one?
That is
Let me just
for
hold on. Let me go grab my schedule here real quick.
yeah.
Uh, are you joining us Tuesday night? Be
Um
careful because if you're testing Wednesday, I'm not sure you want to join us because we could make you go backwards instead of forwards
yeah,
because
yeah, I already booked the DPP. Let me see
yeah, well, no,
DPP.
that's Wednesday. That's Wednesday. But Tuesday night I have another it's free. And let me just see if you're in it or not. And I'll send you the link.
DPP is Wednesday. No,
Oh,
DPP is October.
hold on. Let me grab it. And what I was going to say is that we can do more of this in that session too. So if you want to do some more, go over some more questions, we can
Yeah,
do that
yeah.
on Tuesday. Let me just see if you're in it. So hold on.
But Monday
Um,
too late for
I
me.
don't see you, so I'm adding to you right now. So I'm going to add you to this thing, and you can join us, and you can bring. Well, I'm more than happy to talk about some more of these with you. But let me put you in here. Hold on, just a sec.
Yeah.
Boom, boom, boom. Add guests. And you, how are you registered on my thing? Is it Charlie? Or are you under? There you are.
Shirley, Shirley.
There you go. Okay, so I just added you to this, and yep, there we go. And so you should get now a uh, email Zoom link to that Tuesday night. And that's up to you if you want to join us or not. Like I said, be careful because, there's going to be 15 people in there and they might, make you more confused than you were. So just be careful. But you should have that link for Tuesday night if you want to join us.
Yeah. How about I join with you a little bit early because Wednesday I have
Well,
exam.
I won't be there early because I got our other live stream going on, but I'll stay late. I'll be there afterwards and I can help you then too.
Uh,
I'm booked Tuesday before that, so there's no way I can meet with you before Tuesday.
so
Uh,
Tuesday, what time for this one is what time
I just sent
Tuesday?
you the link. It's 6:15.
Six
It's a
fifteen. Let me check.
6:15. That's right. So you can join us for that if you'd like. I'm just sending it.
Uh, I remember you have a DPP. What time is it for DPP?
The
I already
DPPs is 5:30 Wednesday.
yeah, DPP I already booked.
Yeah,
Yes.
that's fine. Yeah, you're there. You're already there. Yeah, I see you there. So not a
Yeah,
problem.
750. That is
Yeah,
yes,
you can
that
tell
is
us about your testing victory. I love it. Great.
yeah, but I
Yeah,
didn't
cool.
receive your email. You already sent it to me.
I did. You should get the email for with the link to join us for that class for that 6:15.
1 minute, let me
And
check.
you should already have the link.
I didn't receive.
Oh, well, hold on. Let me should show, give it to you there. Let me see.
Mm-hmm.
Whoop.
You sent it
I
to
sent it to, hold
ASP.
on. I'll tell you what I sent it to.
uh,
I sent it to SHENJ at Gmail.
S no,
S,
1 minute. I sent it to you for my email address. Okay.
yeah, Chen J0531 at gmail.com is where I
No,
just,
zero. That is 05, not O.
yep, that's
Zero
where I sent
five.
it. That's where I sent it. So
One
just
minute.
send me, I'll tell you what, just let me just copy it here. I'll just copy it.
No, I didn't get it.
Okay, that's okay. So just hold on. I'm going to send it to you right now. So
No,
copy, and you
one
just
minute.
sent me another, let me
I
see.
send it to you here.
Yeah, hold on. So there you are.
Some of the
Okay,
question I
so I
didn't.
just sent it to you. So I sent it again. And hold on. Boom. Should be coming to you right there. Message sent.
Let me check. No, still not yet. What did you send? I already
I
give
sent the
you.
link to the email you just sent me. You sent me an email with this exam, and I sent the link right back to that same email address. So if you don't get it, just send me another email and I'll do it again. But I just sent it. I just sent it to you.
In chat room, you check in chat room.
What?